Global Market Overview. Handling the Hormuz Logjam, a 275-day recovery from the fundamental crisis. Global supply chains should take note of the Dow CEO's warning. Reopening the seas is only one aspect of the recovery from the major logjam in the Strait of Hormuz. Another is the subsequent 9-month, 250 to 275 days backlog. The impact. Currently, over 20% of the world's petrochemical capacity is blocked. The sector play. While American companies like Dow are managing a two-speed economy, manufacturers in Asia and Europe are dealing with rising costs and force majeure. Investors should seek for U.S. companies that use domestic ethane instead of naphtha from the Middle East, or those with localized supply chains. 2. The technical approach. 3 resources for a second opinion. Technical analysis informs you when to purchase in a turbulent 2026 market, but fundamental news tells you what to buy. These 3 resources can be used by investors to verify their selections. Relative strength analysis, RS. Consider more than simply the price of a stock. Evaluate it against its contemporaries. A chemical stock exhibits relative strength, a sign that large institutions are defending that position, if it remains stable while the rest of the industry declines as a result of the Hormuz announcement. Moving average. 50-day and 200-day moving averages are useful for removing noise. Check to see if the stock remains above its 200-day moving average if the Dow CEO's announcement triggers a panic plunge. If it breaks, the supply chain damage may be more severe than anticipated. If it holds, the long-term trend remains intact. Volume price trend, VPT. Keep an eye on the smart money. Despite the geopolitical impasse, high volume on days when the stock increases indicates that investors are purchasing the decline. Low drop volume indicates that the panic is primarily driven by retailers and could be a chance to make a purchase. Investors' strategy. Trade the resilience instead of fighting the bottleneck. Step action filter. Find U.S. domestic energy and petrochemical businesses with minimal exposure to the Strait of Hormuz. To determine which of these businesses is leading the market, validate using relative strength. Execute. To enter at a lower risk, wait for a pullback to a significant moving average. In summary, according to the Dow CEO, supply shortages and inflation will persist until the end of 2026. To make sure you are entering a resilient leader at a reasonable cost rather than a falling knife, use technological tools.